Good morning, good afternoon, and welcome again to the latest ADM Agriculture grain market update. Last week saw all markets lose ground from where they previously were. The market's focus had really been torn in the last 2 weeks between bearish sentiment in the US, given their lack of export competitiveness. I guess also added by concerns about demand as the market looks forward with trepidation about the potential of the economic outlook looking pretty terrible, and how that may impact on longer term consumer demand. Of course, the other side of that equation has been offset by Russia failing to extend the grain corridor, potentially cutting off the world's access to supplies in the Black Sea that it desperately needs. And alongside that, there are other weather conditions that are producing concerns in both Argentina, where it's too dry, and in Australia, where harvest isn't too far away now, and there's excessive unwanted rains, which is impacting on potentially output and, of course, the quality of wheat. The big news this morning for the markets, as I've already touched on, is the weekend announcement from Russia that they'll suspend their participation in the Black Sea grain deal with immediate effect, and for an unlimited duration. As of Friday night, there were big vessel lineups in the region, with only a few vessels being able to get out per day. I mean, to date, since the corridor started, the numbers that we've got indicate that there's nearly 3 million tons of wheat being shipped, nearly 4 million tons of corn, and somewhere in the region of 9 to 10 million tons of all products. But with Russia effectively bringing a close to the grain corridor over the weekend, the market's now going to have a rethink on how we solve the balance sheet issues, particularly around wheat and corn. And then in the short term, vessel owners and shippers who are in the queue to load are going to face some fairly challenging short-term issues that are, well, very much in a state of flux, and we're trying to see how those are going to be sorted out. I guess from a fundamental perspective, Russia has been the cheapest shop in town, and have been mopping up all of the current spot tender business. But with the export corridor closing, it's going to make the difference between the world having an adequate supply of wheat and the S&D being a tight one, especially given that the EU farmer has probably already committed somewhere in the region of 60 to 65% of his 2022 crop, and that farmers in Canada and the Southern Hemisphere are seemingly unwilling to commit any more sales due to their local weather issues. So all in all, we've got a lot of geopolitics, a lot of activity in the grain markets that are creating a huge amount of volatility yet again. Seems to be the story of this year. And then, of course, close to home, we've got an awful lot of flux in our exchange rate. We've seen sterling see a sharp rally since Liz Truss's mini budget. Rishi Sunak's appointment seems to have brought a little bit of solidity, a little more confidence to market participants' views on how things are going to move forward. However, I guess it remains questionable whether the Rishi effect is going to continue to support sterling, given the harsh reality of both the state of the UK economy and the division within the Tory party. So lots of challenges to overcome there. And I think, to be honest, whilst the underlying fundamentals in the short term certainly look friendly, I suspect this volatility hasn't gone away, and we'll see some big price moves in the coming weeks. As always, we're very grateful for your tuning into our video. If you have any questions or anything you would like further clarification on, please don't hesitate to reach out. Our details are at the end of the video. Thanks again.